The resources sector might be booming, but other industries are going bust. Figures out this week showed another drop in new housing approvals in Queensland. The Master Builders Association says a 2-year slump has seen 34,000 people lose their jobs. And this week's interest rates rise has dealt a killer blow to any chance of a quick recovery. I spoke earlier with the association's Executive Director, Graham Cuthbert. Graham Cuthbert, there's been an outpouring of anger from mortgage holders over interest rates. What's the response been from builders?
It's the same. The industry's really been struggling. Global financial crisis, and for the last 2 years across the state we're down about 33% in housing activity. There's some spikes. The tourism-driven areas of Cairns, Port Douglas, the Gold Coast and the Sunshine Coast, worse than that. Some of the numbers I've seen indicate activity levels dropping up to 60%. So our builders and our industry are really struggling.
With activity and housing approvals already down, will this interest rate hike see an even further decline?
Our industry surveys, which Master Builders do each 3 months, indicate that it will drop further. We certainly are struggling now, and we see this last rate rise, which we believe is totally unacceptable and unnecessary, will really plummet the industry further.
What does it mean for jobs in the industry?
It means there'll be further pressure on jobs. At the peak we've lost 34,000 jobs from August 2008 till May this year, which is a massive amount. We don't seem to get the same coverage as other industries do because of our subcontract system. We lose them in 2s and 3s and 10s, but it's the equivalent of 340 person factory every week for 2 years.
Can you estimate how many more might go with this latest decision?
No, it really, you can't, but there certainly will be further job losses. It's just the amount. The one thing that drives our industry is confidence. And with the instability of the interest rates and not knowing whether there are going to be further interest rates certainly detracts from the confidence of consumers, and no confidence and they just don't purchase anything. We were starting to see some indication in our survey that there may be some recovery, but certainly this last interest rate rise will put that on hold. It just won't happen in the short term.
When do you see it recovering?
All of the independent indications are that housing might start to recover in mid-2011 with a steady increase. Commercial construction, particularly private commercial construction, the indications are not before 2016.
Do you expect to see more businesses go out of business before then?
Well, if you follow the natural trend that when activity drops and employment drops and the jobs disappear, it's only the likely outcome is there'll be further businesses close their doors, yes.
You've already had some close their doors?
We have. Master Builders has lost 2,000 members since August 2008, which is a significant number. From about 11,500 members, we're down to about 9,500, and a lot of those are because of there's just no work, and they're not going to pay Master Builders their membership fee when they've got no income.
Both sides of politics are talking about increasing competition in the banks. Do you think that would be a helpful measure to turn things around?
I think I'd wait and see the detail on that. If the banks change their lending practices as a result of this inquiry or further legislation, that's fine, because that's what they need to do. The banks, certainly in the commercial sector, have lost confidence in the building and construction industry. A number of the larger banks have withdrawn from the market, and that makes the available finance more difficult. And of course the banks are also announcing they're risk adverse with their lending practices, so that makes it very difficult for some developers to get funding and make their projects stack up.
What could governments do then?
I'm not sure about that. It's probably something that we'd let the politicians work through, but certainly we've got to come back to the confidence, and that is we've got to get confidence back into the building and construction industry. We've got to get people wanting to buy again, and when people start to buy, I'm sure the banks will loosen up their adverse risk lending policies at the moment and get back into the marketplace, and that's what we need. So if the federal government can achieve that to allow the banks to have more confidence in our industry, I think that would be the key.